Those are some staggering numbers, but they don't tell half the story. And then if you include those holding anything from $100,000 worth of BTC balances all the way up, they control majority of the Bitcoin available. Those are some jaw-dropping figures. They are staggering figures we are talking about. A very tiny proportion of Bitcoin holders, they control the BTC market and indirectly control the crypto market space. 84 wallets, at least holding $34 billion worth of BTC. Just let that sink in. Where do you rank? That's astonishing, that figure. These are staggering numbers we're talking about. In this case, are we talking of the legacy finance we're all trying to run away from being duplicated? You have the few very powerful individuals controlling what the rest of the market does. No one will want to own up to that because we all want to protect the sanctity of the crypto space. But if we want mass adoption, we need to demystify things like this. It's not a mystery. It is in the open. And there is another slightly disturbing piece of information that we are gleaning from some of this data and some of these charts. Retail buyers, why do they always do this? Why do we always do this? Retail wallets or the smaller wallets, they increase with the price increases instead of going the other way around. Is this just pure FOMO? Here we are looking at data between August 2021 and October 2021. This is what happened. It is just baffling. That is probably why we are not making as much money as we should. That's why you should also be watching this video, because we bring you some of these insights. Larger wallets treat these smaller wallets as exit liquidity. They are playing the game. They are playing it very well. They jump in and out. They jump in and out. It's a case of the classic rinse and repeat. HODL is not a smart strategy. Smart money certainly doesn't think so. Because of that, Bitcoin cannot be and will not be what Bitcoin maxis claim it is. It's not going to transfer wealth from the richest to the very poor. All it's doing is creating another class of the super wealth by transferring wealth from those who are really, really poor to those who are really wealthy, because they've got the tools to accumulate more and they've got data and access to different things. And there's plenty of corruption too. In the absence of genuine use cases for Bitcoin, store of value is not really a viable use case. Hi guys, this is FD for Sage5.tv once more, back with another video, and this time we are looking at the big daddy of the space, that is Bitcoin. We all know what Bitcoin is, but today we are going to dissect the wallet distribution for Bitcoin. We're going to do a distribution analysis. So as of today, there is a total of 40,725,000 wallets holding BTC. Here's a summary of BTC address holdings in USD denomination. Addresses with greater than 10 million worth of BTC balance, they are 7,176. Addresses with greater than 1 million worth of BTC balances but less than 10 million, they are around 80,800. Addresses with greater than $100,000 worth of BTC balance but less than 1 million balance is 357,159 wallets. Addresses with greater than $10,000 worth of BTC balance but less than $100,000 worth of BTC balances, it's 1.88 million wallets. Addresses with greater than $1,000 worth of BTC but less than $10,000 worth of BTC, it's 6.2 million. And then finally, addresses with greater than $100 worth of BTC balance but less than $1,000 worth of BTC balances, we got 15.1 million. Those are some staggering numbers, but they don't tell half the story. Lastly, we got to consider addresses with greater than $1 worth of BTC balance but less than $100 worth of BTC balances. These form the majority. You are looking at 34.9 million wallets. Again, guys, this is not financial advice. This information is just for entertainment as well as educational purposes. So far, what do these numbers tell us? These numbers tell us that wallets holding 1 million or more, they control most of the market. And then if you include those holding anything from $100,000 worth of BTC balances all the way up, they control majority of the Bitcoin available. Those are some jaw-dropping figures. They are staggering figures we are talking about. A very tiny proportion of Bitcoin holders, they control the BTC market and indirectly control the crypto market space. As we all know that as and when Bitcoin dumps, the whole market dumps with it. Bitcoin recovers, the whole market recovers. So these are the people we are placing our faith in, placing our financial freedom into their hands. Now, what about the summary in actual BTC holdings? These are the actual BTC holdings, the native BTC coins. So addresses with greater than 1 million BTCs, as far as I can recollect, I think there is one reportedly belonging to Satoshi. I think that is probably going to be the only wallet with 1 million or more. But there is a question mark, so we don't know exactly, but that wallet is the one that is considered to hold 1 million BTC. So we then start from 100,000 BTC coin. We've got about 4 wallets. They all hold at least 100,000 BTC coins. That includes MicroStrategy, MicroSailor, and other whales as well. There are 4 of them in total. I think Grayscale will be that list as well. So Grayscale, MicroStrategy, and there are 2 more. And I think those 2 more will also include Satoshi's wallet that has remained untouched for all these years. And then we go to wallets holding at least 10,000 BTC coins. There are about 84 wallets. 84 wallets holding at least 10,000 BTC coins. That is astonishing. 84 wallets. And they hold at a minimum 840,000 BTC coins. Just those 84 wallets. That is an astonishing amount. There is a slightly bigger category, which is that of those who are holding at least 1,000 BTC coins in their wallets. We've got at least 2,277 wallets. If you are part of the 84 holders or wallets with over 10,000 BTC, then you have the rest of the world and the rest of the Bitcoin market eating out of your palm. This category holds at least 10,000 BTC in their wallets. It could even be less number of holders because some people might hold multiple wallets. So you might end up having less than 84 people holding at least 840,000. It's at least because the number includes 10,000 and above. So there will be others who hold well over 10,000, maybe hundreds of thousands or tens of thousands. That is an astonishing number. 84 people or 84 wallets. Astonishing number. Each of those wallets hold at least $400 million worth of BTC in each wallet as a minimum. And at a minimum, they at least hold $34 billion worth of BTC. 84 wallets at least holding $34 billion worth of BTC. Just let that sink in. Where do you rank? That's astonishing, that figure. These are staggering numbers we're talking about. In this case, are we talking of the legacy finance we're all trying to run away from being duplicated? You have the few very powerful individuals controlling what the rest of the market does. No one will want to own up to that because we all want to protect the sanctity of the crypto space. But if we want mass adoption, we need to demystify things like this. It's not a mystery. It is in the open. What about the slightly larger category with 2,277 wallets holding at least 1,000 Bitcoins? This group constitutes approximately 0.006% of all the wallet holders. 2,277 wallets holding at least, it will probably be multiples of that, but there's a minimum $91 billion worth of BTC. Again, let that sink in. 2,277 wallets. Equitable distribution of wealth? I don't think so. This might sound like a rant, but it's not. It's basically trying to put all the information out there and for people to make their own decisions. Because from time to time, you hear people cheerleading Bitcoin and asking everyone, all and sundry, everyone and their grandma, go and buy Bitcoin and so forth. But if you are going to sink a very tiny amount of money into Bitcoin, you are just going to be part of the exit liquidity for these guys. As you'll see, keep watching. Guys, this is not financial advice, and at the same time, please don't forget to click like and subscribe, as well as hit that notification bell. I can see some of you are just passing through, guys. You don't lose anything. Just subscribe, even if you are not coming back. I would really appreciate your help, guys. Thank you very much in advance. Here's another piece of statistic that I think will be eye-opening for most of us. Approximately 6 million wallets hold at least $1,000 worth of BTC, with the rest holding relatively smaller amounts. As for the rest, will their BTC holdings make them rich? I doubt it, because you're now looking at 6 million out of over 45 million wallets. Only 6 million hold at least 1,000 in their wallets. So here, around 37 million wallets hold balances that are insignificant or residual balances required for microtransactions. These holders' wallets will not make them rich. That is just an honest opinion. These are all my opinions, guys. It's not financial advice. But 37 million wallets holding Bitcoin, the amounts they are holding, they are a lot less. They are less than $10, I believe. And these will not make you rich. Even if they are less than $100, they will still not make you rich. And there is another slightly disturbing piece of information that we are gleaning from some of this data and some of these charts. Retail buyers, why do they always do this? Why do we always do this? Retail wallets, or the smaller wallets, they increase with the price increases instead of going the other way around. Is this just pure FOMO? Here we are looking at data between August 2021 and October 2021. This is what happened. It is just baffling. That is probably why we are not making as much money as we should. That's why you should also be watching this video, because we bring you some of these insights. We don't mince our words. We give you as it should be. Okay, we give it as it should be. Okay, let's look at the price and wallet growth trends. Those holding at least $1 million worth of BTC, they move with the price. The price rises, these wallets, they increase as the price increases. But when the price decreases, these wallets, they also follow that trend. They decrease. So the data we're looking at here is clearly showing us the same. It's showing us that the wallets that are holding at least $1 million worth of Bitcoin, they decrease with the price decrease and increase with the price increase. So they buy the bottom and sell the top and they exit. In contrast to the smaller wallets, as you'll see later on. So between August 2021 and October 2021, as well as between October 2021 and February 2022, too, you can see a clear trend is getting established. There is a trend. It's clear. It's glaringly obvious what's happening here. You can see the number of wallets increasing, but when you get to the top of the chart, the number of wallets decreases. What is this chart trying to tell us? If you contrast that to wallets holding between $10 worth of BTC and $1,000 worth of BTC, the wallet numbers only follow the price in one direction. That is when the price is increasing, but do not track the price when it's on the decrease. What's going on here? What's wrong with this picture? Larger wallets treat these smaller wallets as exit liquidity. They are playing the game. They are playing it very well. They jump in and out. They jump in and out. It's a case of the classic rinse and repeat being played at here. So the trend is consistent. Wallets holding balances of any significance tend to track the price chart than those with smaller holdings. Now tell me again why you would lend an ear to someone telling you just to hodl. Don't sell. Just hodl. When the bigger players are playing the classic rinse and repeat game. The theme is repeating over and over again. They buy when it's low. They sell when it's high. They wait for the price to drop when the smaller players are panicking, and they buy more to increase their holdings, and they sell at the top again. So they're sucking all the value out of Bitcoin and keeping it to themselves. And the smaller players are, just mincemeat. You're the exit liquidity for these guys. You are helping them increase their bags. I'm sure if I was in that position, I'll probably be doing the same. But then you expect people to learn from history, to learn from mistakes. All we hear is Bitcoin to the moon and so forth. That's not helpful. So hodl is not a smart strategy. Smart money certainly doesn't think so. We are talking of wallets or holders with over $100,000 worth of Bitcoin here. As an example, between August 2021 and November 8th of 2021, these wallets holding at least $100,000 worth of Bitcoin were on the increase, but then they started declining with the price. That's smart money for you. This is how smart money increase their BTC bags. They jump in and out, playing the market. In addition, the top 10% addresses holding Bitcoin have been increasing in size. They've been increasing the size of their bags. How do they do it? Rinse, repeat. Jump in and out. Use the market numbers. Use the market metrics. Buy low, sell high. What is the conclusion from all this? This data, basically what it's trying to tell us is this. In order to increase wealth whilst holding Bitcoin, one is to increase their holdings. Don't just hold waiting for the price to appreciate. You also need to increase your Bitcoin holdings. Some call them Satoshis or Sats. How do you do that? You don't do that just by buying more. Of course, that's one way of doing it. But another way without losing out is to do what smart money does. Rinse, repeat, buy low, sell high. Buy low, sell high. You will realize over time that you're actually buying more units of Bitcoin as you go, because you will have more resources to deploy to Bitcoin. Secondly, smart money in Bitcoin toys with the market, especially with dumb money. Like I said, they use these smaller holdings as exit liquidity, because if we have seen from this chart here, smaller holdings, the wallets are not tracking the price of Bitcoin. They increase with the price increase and they stay steady whilst the smart money is selling. The larger wallets, whilst they are selling, the number of smaller holdings remain consistent until the price goes to the floor. They sell, and that is the very same time that the bigger wallets or smart money start buying more. You got to start playing the game the same way it's being played. Otherwise, all the volume or value being put into Bitcoin will be sucked up by the very few. Like we just seen, 10% of Bitcoin wallets. They own quite a lot. Significant numbers. Staggering numbers, so to speak. Guys, don't forget to click like and subscribe. I've had so much traffic to my channel, but not many people are subscribing. Guys, it's free to subscribe. You don't have to come and watch my video again if you don't want to. But I can promise you, you'll be losing quite a lot. We're trying to bring a fresh eye, a fresh analysis to this space. So, what's the third thing we can draw from this data we have just been looking at? With BTC, we may just be witnessing the same story in legacy finance playing out within the crypto space, i.e. the so-called whale holders or larger holdings accumulating most of the wealth at the expense of the rest of the market. That's not equitable distribution of wealth. It's just continuation in my view. I'm not blaming anyone. It's everyone's fault because we are facilitating and perpetuating this practice. What about the fourth item we can deduce from this data we have just been analyzing? Because of that, Bitcoin cannot be and will not be what Bitcoin Max's claim it is. It's not going to transfer wealth from the richest to the very poor. All it's doing is creating another class of the super wealth by transferring wealth from those who are really, really poor to those who are really wealthy, because they've got the tools to accumulate more and they've got data and access to different things. And there's plenty of corruption too. In the absence of genuine use cases for Bitcoin, store of value is not really a viable use case. Any asset, any digital asset can be a store of value. So store of value is just nonsense. It's not a viable use case. So in the absence of genuine use cases for Bitcoin, market manipulation and corruption will continue to plague the BTC as well as the overall crypto market space. And this will not end until everyone is, championing for one of the altcoins to come and perform the flippening. We can't wait for that. At least we can have a market where not a single single individual holding can manipulate the direction of the whole market, which is what's happening at the moment. Any group of players within the Bitcoin space can manipulate the direction of the market just to rinse and repeat and extract as much value as they can from the whole crypto space, not just from the Bitcoin space, but from the whole crypto space. Bitcoin price appreciation is currently driven not by use cases, but by pure speculation. And then lastly, one can only hope that one day, just one day, we may finally witness the flipping. Oh boy, do we all need Ethereum? Come on, we are all vouching for you. Guys, it sounded like a rant, but it's really not. It's just trying to enlighten the market. I'm sure most of you have already come across some of these things. You may agree with my assessments, you may not agree with my assessments. Comments down below. Guys, thank you very much for stopping by, and I'll see you in the next one. But please don't forget to click like and subscribe, as well as hit that notification bell. Guys, thank you very much. This is FD signing out for Sage5.tv. Bye.